Good morning, everyone. Happy Monday. We're going to get right into the stock market charts. Again, this channel is all about technical analysis, so I'm not really trading based off of, the news or stimulus or whatever. Really, the assumption is that all of that information that you hear in the news and in the stimulus is priced into the chart. So the market knows that there's a infrastructure bill out there. The market knows all that. And all the participants in the market act accordingly with the the information that they're given. So again, it just assumes that the information that is known to the market gets priced into the chart relatively quickly. So we just trade off of the charts. Let's start off. Give me a thumbs up, and we'll get right into it. And also, if you're new to the channel, check out my course. I leave a link in the description below. I charge $99, but it's a 5-6 hour training course. I think it's well worth a new skill set to pay $100 for a new skill. All right, let's get right into it. Q's gap fill today. So there's your gap fill right there, about 330.40. We haven't fully gap filled. If I roll out, and if you look at this hourly chart right here, I've got it circled, but close enough. 330. It's about 330.50, and we traded. As you can see, we just got really close to filling that gap. So close enough that we can say it's gap fill. Again, when you're looking at a $330 instrument here, and you come within 50 cents, that's close enough. So where do we go from here? Now that we've filled that gap, which should be the next, this is likely to be resistance right here at this gap fill. So I'm watching for how we behave right around this level. I think it's objective to take a short trade right here at this level as we rally right into this resistance level. It's objective to short at resistance and obviously go long at support. So I'm going to start, I'm starting to take some short position in the triple Qs, just a starting short position. I'm not going to fully load it until I see, the price action start to move in my favor, but we'll take a shot at it here. One thing to look at, if you look at the daily, we still have negative divergence. This is just continuing to, work itself lower. So this pop this morning is, not breaking anything technically in the momentum indicators. The momentum indicators are still indicating that momentum is trending down. See how we have a downtrend line there and a downtrend line right there. So until we break that and take those out and make a new higher high, which would really need to be above, really about here, 81.75. We need to go move higher than that. Then we still are indicating lower momentum. So the way that you can view this in price is this is just a divergent high, basically making a new high against the former high right here. Well, let me look to make sure. Well, it's not actually a divergent high. It really is just continued downward momentum, and we've got price kind of counter trend bouncing. So if momentum continues higher and the price continues higher, then we'll take out these negative divergences. That's completely possible. However, if we get rejected here at the gap, which is, we're at kind of a resistance level where the seller should be stepping in, then this will indicate that this was just a counter trend bounce and the downtrend is still intact. So as of right now, I'm going to short at resistance and look for a move lower and then stop out if we move much beyond this level where we're at right now. Again, for a swing trade on this, if you short here, my target, really my ultimate target would really be down here about 287. I've got it circled down here. That would be the next leg lower in tech. And that's where I'd be targeting for an area to potentially cover a short that I took up here. So that's the trade idea. Short at resistance, cover down at major support. There's some support obviously here at 297 as well. That's where we bounced previously. But if we get back down to that level, I think we'll probably just undercut it and run down into this range here. Okay, that's the trade idea on that one. One thing to point out, though, about this trade idea, look at Microsoft. So Microsoft and Apple make up a huge percentage of the triple Qs. And Microsoft is kind of breaking out so far today. You can see here, here's your high your previous high right here, and that's a pretty impulsive breakout candle, pretty impulsive buying candle. So keep an eye on that to see how that closes the day, because obviously that doesn't help the case to short triple Qs when you have breakouts in the major stocks that make up that indice. So something to take note of. Now this is a divergent high. If I zoom out, you can see that we're making new all-time highs here on much less momentum. See how the momentum is way lower than the previous high. Here's your previous high in price. Here's your previous high in momentum. Here's a new high in price and a much lower high in momentum. So that is a divergent high, but it's not confirmed, because if you can just continue to break higher, the momentum's going to break higher, and we could take out that negative divergence. So something to watch. Now if you turn down here in price and momentum starts to turn down, then this is going to prove to be just another divergent high, which will likely fail and head lower. As of right now, you have a breakout intraday, so we got to watch that. And Google's also breaking out. You can see here's Google breaking out above this recent range here. Pretty impulsive. Again, it is a divergent high, but it's not confirmed. So you go much higher and you're going to take out the negative divergence that exists in the RSI. And, there's your PPO negative divergence. So again, you have negative divergence. That's not a reason to necessarily short just because you have negative divergence. It just tells you that it's a weak high. It's a high made on less momentum, and it has a higher probability of failing. But again, until you see that failure, or you start to see the momentum start to turn down from here, then it obviously can the momentum could be building here. That's the point. So again, just on the Q short, it's I think it's worth a shot to short at this gap fill, but it hasn't fully gap filled. If you wanted to wait, obviously, till it runs up to 330.50 or so, maybe it'll pop it a little bit. But I think this area is objective to short. But again, I'd just probably put a stop not too far above, probably up around this 333, 334 area. I'd probably want to stop out right up around there, because you get much beyond there, you're probably going to run and make all-time new highs. The SPY S&P 500, if you look at the daily, we are making another divergent high, popping above this blue resistance line. That's okay. This isn't, necessarily a breakout, but you can see here. Let me show you on the weekly, the blue resistance line here comes all the way back from the 2009 lows, and we held support back here in 2016 several times. Held support there, all through here. So this is on a weekly chart. So it indicates a more major trend. We broke support, and we've been backtesting ever since 2018. So there's your backtest, COVID failure right there. And as you can see, there's where we're at right now. Now this is a weekly chart, and the week just started. So you got to wait till Friday to see where this week is going to close at. If you look at the daily, obviously we're up above that resistance line just slightly, but again, this is a major trend. So to pop it, intraday or even a daily close, it is not necessarily a breakout, because it's such a major trend. You can pop it a little bit. It's just what I would look for is, does it hold many days in a row above and really start to build? That might indicate something is changing, but as of right now, we are above it. If you look at the momentum, though, still just another divergent high. You can see here negative divergence in the S&P 500, negative divergence, on the RSI, negative divergence on the PPO, and this high right here is just another all-time high and a divergent high. So again, we continue to kind of grind, making these slightly new higher highs, but they're all divergent highs. So to me, that says you're likely going to wake up to some big red candle, but until you see it, it's we're just continuing to move higher. I don't see a reason to just short right here. I'd look for other signs, like if we fail, start to break back down, get some sort of a reversal candle. That might be your next sell signal, but I just don't see a sell signal yet. Even though we have negative divergence and we're at major resistance, I'd like to see some sort of a sell signal reversal candle prior to confirming a short or stepping into a short on the S&P 500. And keep an eye on TNX and TLT just so we can watch the interest rates on the 10-year Treasury. TNX is tracking the 10-year Treasury interest rate. So right now the interest rate is sitting at 1.73. The higher this moves, the more bearish that's going to be for stocks. So just keep an eye on that. If this continues to trend higher, and it is trending higher, I mean, you can see here clearly in an uptrend right here on this daily chart. So a move higher should be bearish for tech stocks and the market in general. Right, we've been consolidating the last couple of days. The market's feeling okay with where rates are at right now, and trying to claw its way back. Obviously, the S&P 500 just made all-time highs today, so the market seems okay with the interest rates right here. But if they move much higher, and especially the rate at which they move, if they move higher quickly, that's where the problems really start to come into play. So just keep an eye on that. All right, so gold. Gold continues to just have this bullish divergence here that was in play really last week. And I don't see any change in posture as of right now. So we have, in gold, we have a downtrend in price. We have bullish divergence, right? This was a divergent low right here. So we have bullish divergence indicating we're going to reverse trend. But we haven't seen that complete trend reversal yet in price. So that's what I'm looking for. I'm expecting that to show up. The miners seem to be indicating that as well. If you look at the miners, intraday, well, we'll see where this one kind of plays out. But here's Newmont starting to break above this bull flag. We'll see how the day closes. Some of these others, though, like Sand, you can see kind of breaking out, above this downtrend here. We break out, back test, and then continuing to uptrend. Another one, Franco-Nevada, clear breakout there. You have this bullish falling wedge with some bullish divergence right there on the RSI, not on the PPO, but it was on the RSI. This was a divergent low, and we broke it out. You can see we're just, pretty impulsively breaking out. Barrick Gold looks good, kind of looks the same as Franco-Nevada. Breakout, backtest, and continuing to trend higher. So in general, that looks good. Harmony Gold Mining, that broke out last week. On Friday, it looks like. So there's a breakout. Just taking a breather so far a little bit today, but pretty clear breakout there. Let's see here. What else do we have? A lot of these are just kind of moving up. A little flat today. Some are up, some are down, kind of flat. But many are moving up. I mean, Barrick Gold's up, almost 2%. So we'll see. Keep an eye on these. I still like these gold miners. They look bullish to me, and I'm long up many of these. Okay, let's look at some of these kind of momentum stocks. They were the many momentum stocks of 2020, and I'm looking for a lot of these. They just continue to look weak. So here's Snap. Snap basically had this uptrend line here on the daily. We broke trend right there. When we broke trend, we also had negative divergence. So the momentum just dropping off a cliff. So you had negative divergence up through here, and everything seemed great. Price was still moving higher, but then you break. And there's your, this is basically your sell signal right here. So we ran up to resistance, which is this was your first level of resistance, about 55, and we're getting rejected today. It opened higher and is moving lower. So getting rejected at resistance, that still looks like, probably the end of the bounce. We could run up and back test, but, we're at resistance. So I think it's likely we get rejected here and continue to move lower towards filling this gap all the way down here at 29.30 in this area. AMD's kind of hanging in there. It's trading sideways. AMD, if you look at the 2016 lows, this is your uptrend line in AMD, and you have negative divergence right there, big negative divergence, broke trend. That's a long trend. That's almost a 4.5 year trend basically, or 4-year trend. You broke trend, backtest, and we're continuing to kind of tread water, but below trend. So I think we're consolidating as we, and then eventually I think we'll break to the downside. Apps, Digital Turbine, here's your uptrend from the March 2020 lows right there. Broke trend, and we've been backtesting and really just kind of treading water below trend as well. Negative divergence is intact. And, I think we just continue to kind of tap on this support down here at 65 area, keep tapping on it, and then eventually break. Next level of support, I think, is down here around 40 bucks. Someone asked me what I thought of the trade desk. Look, the trade desk is downtrending, and I don't see a change in trend. Possible. Well, it's kind of mixed signals right now. If you look here on you do have some bullish divergence. Let me get rid of this. This was your former negative divergence that told us we were going to break down. You did get a pretty impulsive breakdown. I mean, from the breakdown here all the way down to the lows, it fell almost 30%. So that's a nice sizable drop. We bounced off of that, and we're continuing to make lower lows and lower highs. So that's something to take note of. We're at the 200-day moving average. It's kind of battling with that, but I don't see a sign of a reversal yet. I think it's likely we're still going to downtrend. Now, we do have slight bullish divergence. Here's the RSI. If you look at that right there, so this low was a divergent low. So there is bullish divergence on the RSI. If I look at the PPO, it's not quite there. So it's mixed signals on the momentum. So, I don't know. Until I think you probably still downtrend until I start to see signs of, some further signs. But again, I think there's better trades than this one because you have the mixed signals. I think there's probably some better trade setups. Here's Etsy. I've been short this thing really since all the way back here, since February. So a couple months basically. I'm just I'm not losing money. I'm not really gaining money. It's just treading water. But again, I think we're going to break to the downside. I'm looking for a move down to 166. It's about 167 as the next level of support. And I think we're going to get that here maybe this week. But you can see here's an uptrend line there. We broke trend. Let me zoom in. Here's your break of trend right there. You do a back test, you fail, and we've been moving lower since. You can see we're kind of making lower highs. See how we're just downtrending, and we just need to make some lower lows to kind of confirm that downtrend. But we have negative divergence, big negative divergence. So this was all divergent high. When it was slightly grinding higher, it was making divergent highs. And I think we're going to fail and continue to move lower in this one. So still sitting on this one. It's a swing trade. So just waiting, letting it kind of do its thing. Here's CHWY down 4% today. Again, I shorted this thing right here at the kickback rally to resistance at 90 bucks. So this is up over 10% already in just a matter of, about 3 days. And this one, you have an uptrend line here on the daily chart. You made a divergent high. Here's your divergent high price action. So that was your negative divergence. See the momentum, how it's just dropping off. We broke trend, a series of back tests, and we're, kind of starting to resolve to the downside impulsively. You see, that's 3 days of pretty impulsive selling. So I'm looking for this to continue, the selling to continue, and really start to downtrend to the downside. The 200-day moving average is right down here, so we're likely going to get some sort of reaction down there. But I think ultimately we'll probably break and head a little bit lower. Down in this area, probably down here, 52, 56, I think would probably be my my final target to the downside on that one. And that's going to be a drop from where we're at of another 30% or so. Tesla's rallying a little bit today, still battling it out with this trend line right here. So you've got this trend line coming off this August 11th area. You had held support there, held support there. We're kind of chopping through it. So Tesla's, I don't have a trade on this one right now. It's kind of choppy. I shorted this thing up in this area at around the 850 area, covered it as it dropped down to like 600. And no, I think I actually covered it right here at this 620 area right there. And we're just kind of battling it out right now. So until I see another sell signal or an impulsive break, I'll just let this thing do what it wants to do. Corn, again, I circled this high that it just recently made. That was a divergent high. See the negative divergence here on corn? See how the momentum's just trending down, dropping off on the PPO, and also dropping off on the RSI. If you don't have PPO on your chart, use MACD. It's very similar. We're looking for downtrends, so see how we're downtrending in RSI and the PPO. and it made a slightly new high right here. So that was a divergent high. I think it was a high probability that this fails and gets rejected. So again, you know, this tells me corn is, you know, going to go lower, you know, and break lower and possibly head down to this 1544 area. I would be looking to be a buyer. Ideally, around 1420 would be, I think, the most objective level. You can see we held support there, held support here, and then it was resistance once it broke. There's resistance, and then it struggled as resistance right here. So a move all the way down to that level would be the most objective area to go long. And that's really what I'm interested in on this one, is to go long corn down at this level, down at this area. That's all I got, guys, for the video so far this morning. So I'm going to get this one out there, and just that's kind of the basic morning read that I got, and we'll see if anything changes throughout the day. Otherwise, I'll catch you guys on the next video. Bye.